The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.
Speaking of Russia, we have a very interesting interview for you. Georgi Aronia talked to Maxim Mironov, professor of IE Business School. Georgi Aronia will tell us more. Georgi, welcome to the Checkpoints, and please introduce Mr. Mironov more closely to us, and also what were some of the topics, the main topics that you focused your attention during your conversation.
Hi, Elena. It's a pleasure to be here. Last week, I had an honor to talk to IE Business School's professor of finance, Maxim Mironov. We talked about the inability of the Russian state to fulfill its international financial obligations, as well as the results of the sanctions and the current state of the Russian economy. Maxim Mironov's primary research interest is in empirical corporate finance. He's also interested in international accounting, management compensation, and corporate governance. Before joining IE Business School in 2009, Maxim taught as a visiting professor at the New Economic School of Moscow. His non-academic experience includes working as an investment director at PSC, one of the largest direct investment funds in Russia.
Yes, thank you, Georgi. Thank you for this very interesting conversation that we will be seeing. Just right now, I think it's high time to see Maxim Mironov on Russia's default prospects and much more.
Well, Dr. Mironov, thank you very much for being with us and for taking our questions. My first question would be regarding the default that the Russian state announced just today. Could you elaborate on that? What does it mean for the Russian economy, and in other sense, what does it mean for the world economy?
Okay, first of all, a Russian state didn't announce default. It announced that it doesn't have default. So, it was announcement of Bloomberg, I think, which was issued last night. But I think it's anyway, it's not important at all. So it's a purely technical issue which has nothing to do with the state of Russian economy. So Russian government has enough money to pay. It's not default in a classical definition of default, like when you owe money, but you don't have money, which is why you have default. Here, Russia does have money. Russia has willingness to pay. It did all possible steps and measures trying to pay. Today, Ministry of Finance issued a statement explaining that they did all possible things to pay. So it's rather a technical issue, and is not going to have any kind of consequence, because the main consequence come from sanctions, from restrictions, and so on. And default is actually one of the consequence of the sanctions, because Russia cannot pay its debt. That's it.
What in terms of the reputational damage? Will it add another layer to already damaged reputation?
No. It is not going to add any reputational damage, because the biggest reputational damage was caused by Putin's illegal war, and this is the source of the damage. All other damage is consequence. So again, Russia cannot pay its debt, not because it doesn't have money, not because it doesn't have willingness, because it cannot. Russia cannot physically pay its debt. This is the reason. So it's not going to add any additional damage to reputation.
Mr. Mironov, what in terms of relations with China? Will it have any consequences on the purchases from the Chinese side, for instance?
I don't think it's going to have any relation with China, because the main concern of China now, whether the West is going to put any sanctions on China if it continues to deal with Russia. I think it's the main negotiations come from China with the West, especially with the United States, and this is the main source of concern for China, not Russia itself.
During our last talk, which was in March, right after the beginning of the war in Ukraine, you said that sanctions were very important. Now it's June already. Can you elaborate on how effective they were, and if Western countries need to introduce any other additional sanctions to combat Russian
Yes,
state's actions?
sanctions were quite effective, and we can see that Russian economy is basically collapsing. Several industries basically are dead now completely, like automotive industries. So if you look at production output of cars, it dropped like 5-6 times in April and May. So you see, basically, the entire industry is dead. And it's not going to see a fast recovery because plants do not have spare parts, they cannot produce, and very soon it's going to be massive layoffs because there is no demand for such number of employees. Also, airline industry is basically completely not completely halted, but it's close to death because Russian airlines cannot fly abroad. They cannot repair the aircraft, so they already start like laying off pilots and other personnel. And the demand for internal airline travel also collapsed. And this is just like two examples, but other industry also suffering a lot because like if you produce steel, let's say automotive industries, they have a lot of suppliers in other industries like steel, like I don't know, wheels and so on. So we already see a drop in other industries which produce raw materials, and also caused by this is also caused by strong ruble because they export steel at low prices and exchange their dollars or euros in rubles, but their cost in rubles actually increase because of inflation, because of internal inflation. They must increase salaries. So, for example, steel industry already suffering because of the strong ruble. So we see a full-size recession in Russia, and the collection of VAT tax, one of the most important tax in Russia, if you're not talking about oil and gas taxes, it drops in real terms almost 3 times in April. So it's a huge. It indicates a huge drop in consumption. So you can see, but of course, the West could introduce much more severe sanctions, like ban on export of gas, Russian gas and oil. And we can see they're still negotiating within the European Union whether they should proceed with stricter measures or not.
Is there political will to do that in Europe, in your opinion, in Europe and the Western countries in general?
The thing like the European Union, it's not one country. There are 27 members and all have different interests. If you're talking about like countries like Poland, like Baltic states and so on, they are much more aggressive in terms of sanctions because they understand that they could be next. So they are pushing for much stricter measures, much stricter sanctions, and for much faster delivery of modern weapons and arms to Ukraine. But other countries like Germany, for example, France, Italy, they take much moderate approach because they don't feel imminent military threat from Russia. They're more concerned. They're more concerned by their situation in the internal economy, by the because like there a lot of German industries are built around cheap Russian gas. So they understand that if they're going to cut the gas supply from Russia, many companies are going to bankruptcy soon, and they're going to lay off people, and they're going to lose votes and so on. So they try sort of minimize the internal political pressure from these industries.
Is it the price? Are Western countries willing to pay that price, whatever you just mentioned, in order to mitigate Russians' future actions, including not only political but also military, of course?
Again, as I mentioned, some countries definitely willing to pay, but some countries not. So there is no one West. So there is as far as I understand, there is a huge internal debate within the European Union whether they're going to impose stricter measures on Russia to end this war quickly or not. So some countries are ready, some countries are not. So this I cannot provide better answer.
Mr. Mironov, another topic I want to touch upon is the ruble's exchange rate, which has been decreasing week by week, even though nothing indicates that it should have been decreasing. Can you please elaborate on what's going on and for how long can this continue?
No, everything actually indicates that it should go in this direction. So because the supply of dollars and euros is huge, because as I mentioned before, the ban on export of the Russian oil and gas is still not in place. So Russia experienced a huge influx of foreign currency, but import basically halted. So Russia cannot buy many goods. So, and if you have, why do you need currency? You need currency to buy foreign goods. So if you have a huge supply of money, but demand is much lower, of course, the exchange rate of ruble is going to be strengthened. But also there is huge restriction on capital flows. For example, foreign investors, they cannot sell Russian stocks. They cannot exchange rubles for dollars and withdraw their money. And Russian residents have restrictions on sending money abroad, which is now a bit relaxed, but still they're quite strict. So it's artificial rate. So if you think about equilibrium, you always have a demand and supply. Supply is the same because even if we look at a drop in natural volumes of export, but because of higher international oil price, so Russia is getting quite a lot of oil money and gas money, so roughly the same as a year ago or even more. But demand, which measures by demand for import, demand for export of capital, and demand of from people who wants to buy currency and just move it out of Russia, is basically restricted by different measures, by sanctions and by internal restrictions of the Russian central bank. This is why you have a much stronger ruble than before. So there is no surprise. And the future of the exchange rate is going to depend mainly on whether the Western countries are going to implement the restriction on Russian export, because until they restrict the influx of this money, the ruble is going to be quite strong. So basically, the West is paying to, the European Union is paying to Putin like 700, 800 million of euros per day. And you need to restrict this influx of money. And if they can restrict this influx of money, the Russian ruble is going to be weaker and weaker.
The Checkpoint is presented by GM Pharma, the first international multinational pharmaceutical company in Georgia. GM Pharma, to serve those who need it most.